if we do break lower and we get this weakness, midpoint of that wick right here, consequent encroachment, it could drop down there, not take out that low. So in your notes, anytime there is a short, stubby little wick, okay, and what do I mean by that? See how long this candle is and then how little the tail is, the little wick? That to me is a very short, stubby little wick. In relationship, how am I basing whether a wick above a candle or below a candle is stubby and short? It's relative to its candle size from high to low. So that way there's your reference point. Versus something like this. So you have a long wick and it's the majority of the entirety of the candle. See that? So in relationship, this tail or wick on the low of the candle is short and stubby. And many times you're going to find, this is what you want to have in your journal and in your study notes. Many times that type of low will get probed without going through it, and it'll stop at consequent encroachment right there. So in other words, give you a visual of what I'm referring to. It could drop down, come right to it, or just below it a little bit, and then retrace, and then at a later time come back down through it. Whereas a long wicked candle, generally, if you're on the right direction, in other words, if you're looking at a wick like this and you're bearish, many times it'll go right to consequent encroachment and stop dead in its tracks and go the other way. Or if it's really weak, it'll only go up like 1/4 of the wick, stop right there, not even go to consequent encroachment, and then drop. The instances that it does that very thing, that is a real hardline indicator that you are in a very bearish market, because generally you want to see the algorithm reprice back to consequent encroachment of a wick. If you're bearish, if it's in a very, very long wick like that, consequent encroachment, which is the midpoint of the long wicked gaps, they're barriers. But if it can't even reach that while you're bearish, and it goes to the quarter range of the entirety of that wick, not the full body high and low, where the wick is generated from the high down to, in this case, because it's a higher closing candle, you'd be using that closing price to high. And the other thing I want to teach about this morning for wicks is when you have a area where the candles create a wick, like for instance, like right here, see that? The body comes down essentially to the old fair value gap high there. And then the next candle we open here, we trade the opening, or the high end rather, of the fair value gap on this candle right here. But we have this wick on this small little down closed candle right here. The next candle, when it opens and trades up and comes back down, if we have this candle here go up to what would be almost essentially the midpoint or consequent encroachment of the next candle, we don't even know that it's going to create this pattern. But should it form that, generally you will see the consequent encroachment of that wick. If it's bearish, it won't reach it. And you can see that happening right here, because this candle here is a precursor. Then you get the actual wick here that's on the high. And when you see me sometimes taking live executions and I'm entering trades, I'm sometimes using that very criteria right there and trusting that as I'm seeing the candle open and trades right up to that point here, I'm trusting that it won't even go through consequent encroachment. I'm not fearful of it because it's that type of signature I'm looking for. It's kind of like justify the confidence behind the idea. We have this imbalance here that we didn't come all the way up into. I like that. I like the fact that we couldn't even come back to this old low. Remember what I was saying earlier about the relationships of the wicks in the candles. When they fail to reach the midpoint of the wick and they're like it's a high, for instance, something like this, okay? You're looking at that type of candle. And if you're bearish and the next candle tries to get up there but fails to get to even the midpoint of it, which is consequent encroachment, that indicates that you're really bearish. And the same when I look at a gap like this sell side imbalance, buy side inefficiency, which is a fair value gap. What kind of fair value gap? A sell side imbalance, buy side inefficiency. The market tends to want to reprice back up into the range and as far as the previous candle's low. If we see something like this, I like that. I like to see it in my intraday charts for my intraday trades, and it's just what I'm expecting to see price do. I like the fact that we did this here. But if we're expecting lower prices, the best signature on Sunday's opening would be a gap lower opening and then a rally back up into it overnight or into Monday morning. And then does it show a willingness to want to go lower?